investment advice, but it's for educational purposes only. Okay. So let's talk a little bit, guys, about Pristine. So we've been an industry leader in education for traders for a long time, actually since 1994. Many of you guys have probably heard of us. We've been training hedge fund managers, market makers, new people who've never owned a stock, virtually all of our competition, and today, you, right? So we will be here working with you today as well. So we're a 19-year veteran, guys. What we do is we provide education material that's complete, it's in depth. We have professional traders and instructors that explain things in great detail. And we have incredible follow-up to make sure that you understand things correctly. We have 24 follow-up lab and coaching sessions per month for our members, and only Pristine does this. We're also the 2012 award winner from Traders Planet for the best trading course. Okay, so that's just a little bit of background on Pristine. Let me also mention this. So in the month of November, this happens to work out well for you guys being this event right now. So we're giving 30% off all of our courses, the programs, trading rooms, newsletters, plus, you know, if you enroll in our Success Program or Equity Prop Program, you can receive an extra $450 off. Okay. Now, let me give you guys a couple things. We've provided a couple free things for everybody who has taken the time to attend the event today. All right. So the first thing that we're going to do is give everybody a free class. All right, for attending today. Now, this is a webinar that we're doing next week. It's on Thursday. It's a 2-hour live event. It's on risk management, the optimal way to grow your account. Okay. So this price is for $300. This is free to everybody who attends today. All right, so what you need to do is write down this email address, support@pristine.com. So make sure everybody writes this down because we're going to give you some free information, but you need to email us so that we can get you registered and get you the things that we're promising to give you. Okay, so support@pristine.com. All right, so this is a 2-hour event next Thursday, November 21st at 7 p.m. It's going to be about a 2-hour event. It's one that you definitely don't want to miss. It's free for you, so make sure you attend. Okay. The other thing we're going to give you guys for attending today is a free course on predicting trends with intermarket analysis. So this is given by Greg Capra. All right, he's the president and CEO of Pristine. He's He's a 6-time trading champion. This is a recorded event that we're going to give to you for free for attending. This is information that you're not going to find anywhere else. All right, so it's pro level instruction. So make sure that you email us. All right, support@pristine.com. So we're basically giving you guys $500 of our education material for free just for attending today. All right. So everybody write that down. I'm going to pull these slides back up at the end of my presentation for those who are coming in a little bit late. So we just want to thank you guys for attending today. Let me give you a little bit of background about me real quick before I jump into my material. So again, my name's Jared Skinner. I've been trading since 2000 is when I first got started in trading. Full-time since about 2004. I jumped full-time. I was taking education courses and programs from companies. Also, Pristine was one of the first ones that I came across as well, which helped launch me into becoming a professional trader. So I have I've worked for companies where I have trained traders independently, where they've come spend a week at a time at my trading office, and we just trade together for a week and go through things. So I've done that for a number of years. I've moderated Forex trading rooms, futures trading rooms. I've been the global head of education for an international firm. Currently with Pristine, I am part of their Forex prop trading program and have helped design that with Pristine. So that's what I want to introduce to you today a little bit, what I do. We have a Forex proprietary trading program. So for those who aren't familiar with what a proprietary trading program is and what it does, basically, it's where you have the ability to trade the firm's capital rather than your own. So if you join our Forex proprietary trading program, you trade our capital versus your own capital. So this basically helps us out in a way and helps the trader because we can give you more targeted feedback during your training because we know exactly what you're doing. We see the trades, we can see trends, and we can help you become a better trader. All right. It also reinforces more professional trading behavior because you're kind of forced to stick within risk management guidelines. I think for me, one of the biggest problems with being a trader was I wasn't really accountable to anybody. And so you were kind of free to do what you wanted. And a lot of times you were free to do a lot of bad things. Okay. So when you're part of this proprietary program and you're trading the firm's capital, there are risk management guidelines that you have to stick by and you become accountable. So you become a more disciplined trader. All right. We also emphasize steady profitability rather than just going for the home runs, and then increasing your risk only when appropriate, because we only allow you to have certain position sizes as you show your profitability. So you have a smoother transition when you increase your position size level as well. Okay. And we give you access to bigger buying power the more profitable you are. And I'll show you guys an advancement table here in a second. All right, so one of the biggest advantages of being part of a prop program is that you are basically, if you're not profitable, you're not losing your own money, right? You guys have probably experienced it or have seen or know somebody who's lost hundreds of thousands or tens of thousands of dollars because they're not, they're trying to get through that learning curve and they're not managing their risk correctly and they blow out their accounts. Well, as part of a prop program, it's not your money to lose, all right? And so you avoid losing lots of money. It's a big common incentive. So the common incentive being this, as a firm, you're trading our money, so we want you to be successful. So we're providing you with all the tools and training necessary to become a professional trader, because if you're successful and profitable, so are we, because we share in those profits. All right, so this is a trader advancement table. Let me explain how this works with the prop program. So level 1 is where everybody would start, and you have a position size of 10,000. That would be your position size available, which is one mini contract in the Forex market. You have a daily loss limit. So if you lose more than 50 bucks, then we have a weekly loss limit. So if you lose $100 through the week, right, you're done trading for the week. Now, if you can make $60 at level 1, then you can advance, and we give you a bigger position size. All right, all the way down to a $2.2 million base currency position size, or 22 standard lots. So this is a unique opportunity because most traders don't have hundreds of thousands of dollars to trade with, to basically trade comfortably for a living. But as part of a prop program, you have the ability to get to a position size fairly quickly where you can trade for a living, and you do have a fairly significant position size. Okay. So with this, guys, let me just show you a quick comparison. The retail account parameter. So let's just take a retail account versus a prop trading account and just show you what the difference would be. Let's assume that we all had $8,000 to start with, and we were going to risk 2% of our $8,000 per trade, or $160. So in our assumption, we're just going to assume that we made 2% a week. All right. So most traders will probably place maybe 10 trades a week, maybe more. But we're going to assume that we only make 2% of our base capital per week. So with a prop account, we're going to use similar parameters. Now, with a prop account, you don't have an account balance per se. You have a position size. So we take a risk of 20% of the weekly loss limit versus a percentage of the base capital, all right, because it's structured differently. But let's assume we made the same average weekly profit. So if we looked at these graphs, and if you were trading a retail account, essentially you could make about 20 grand if you followed those objectives. If you were a consistent trader, you only made 2% on your capital per week on an $8,000 account, okay? You'd grow to about 20,000. Well, with a prop account, you can kind of see the difference here. You obviously start out early where you don't make as much money because your position size is pretty minimal until you can prove you're profitable, right, to protect both you and us. Well, once you can start to prove and you start to move up those levels, what happens to the growth of the account? What happens to the growth of the account? So look at the curve. What happens to the equity curve? It starts to do what? It starts to increase dramatically, right? So exponential increases, right? Because you start to get into those position sizes larger. This is over the course of a year. And you just basically get into the bigger position sizes that you're able to trade, right? Because you start off with really small position sizes as you prove it, right? You have the ability to get into these bigger position sizes, okay? So within a year, trading a prop account with the same type of parameters, you could be exceeding what you would with a retail account. And this isn't even getting into the higher levels of the prop account. Okay, so let me just post this, and it's a very unique prop account. We've looked at almost all the different prop programs out there. We've made it the most unique prop program that exists, and it's a very, very, very geared towards helping the trader advance. I would say the easiest, essentially. Okay, let me post a link, guys, so that you guys can look into this a little bit more. But this is the program that I represent with Pristine, and this is the program that we've put together. So let me pop in a link here. You guys can look into this a little bit more detail. Okay. No, you can't become a millionaire in a year. That doesn't work with the prop program. So, but you can get to a point where you can trade a pretty substantial position size if you're a consistently profitable trader, right, without risking your own capital. Okay. All right. So go follow that link, and I want you guys to look into it. I don't want to spend any more time on this per se. What I want to do now is start to get into some of the trading concepts that we talk about and that we teach in the course, okay, in this program. So if you want more information about this course, the program that I represent, that link will help you out with that, or just email one of our counselors. Okay, but so let's jump in. Let me talk about kind of what we focus on. One of the trading concepts and some of the strategies that we focus on within the prop trading program. So like I mentioned at the first, one of my key goals is to try to maximize my profits by looking for trade opportunities that have the ability to become big winners. Okay. Now, the way that we do this is by looking for price expansion patterns. Okay. So let me break this down, and let's kind of talk about, these are the two main points that I want to focus on for the remainder of the session. So first of all, when we maximize profits, when we get into talking about this, let's assume that we've got this trend that's pushing lower, and then we've got another trend that starts pushing higher. Let's look at this uptrend for now. So let's look at this uptrend. And the question that I have for you is, where at in this trend are you going to maximize your profits? At what point in this trend is a good entry or gives you the ability to maximize your profits? Okay, is it going to be up here on this retracement or this breakout? Okay, so Dave says on pullbacks. So Dave likes to buy the pullbacks in a trend. Okay, so some people say, well, at the bottom or at the start of the trend. So the lower levels essentially give us the opportunity to achieve higher profit potential, right? So, I mean, could we buy the retracement up here? And the answer is, yeah, absolutely. Could we make money on that? Yeah, we probably could, right? So one of the risks that we have about trying to pick the bottom is it's a little bit risky, right? It could be a little bit higher risk, maybe a little bit more difficult, all right? So if we try to pick the very bottom, a lot of people, like to wait for this trend to get going, and then they start to, feel comfortable that the trend started. So they start to maybe buy in these areas. So the logic is this, guys, right? I mean, the earlier on in the trend that we can get, the more profit potential there potentially is, right? Does everybody agree with that? I mean, it's just logic, right? The earlier on we can identify the trend and be comfortable with it, the more profit potential there is. So what I like to specialize in is trying to figure out, okay, when is this trend, this downtrend here, going to change? And when am I going to see an uptrend begin? And if I can figure out that, I can maximize my profits, okay? So that's what I want to focus on today. And I want to show you what I do to identify these new trend opportunities, okay, is what I'm trying to get at here. So the key to maximizing profits, one of the main things we have to do is we have to identify where the new trends are likely to form, all right, where they're likely to form. And then we have to know when it's beginning to, when a new trend is beginning. So we have to be able to look at the chart and say, okay, where is a new trend likely to start? And then we need to know when it's actually happening. Okay, so let's talk about those two concepts. it really comes down to me to multiple time frame analysis. So let me break this down a little bit. What I like to do, guys, is I like to look for location items on a higher time frame, the daily or the 4-hour chart, and I need to have a higher time frame directional bias. Okay, so that's something that I need to do. You've really got to use a multiple time frame approach to be able to do this type of thing, or try to maximize profits by trying to identify where new trends are beginning. So when I talk about location items here, what I mean by that, it's basically areas where buyers and sellers are interested in getting involved. Okay, so what would be a location item? So where buyers and sellers are interested in getting involved. If I said that's a location item, what would be an area on a chart that might do that? So somebody says pivots. Okay, yeah. So pivots could be a location item. Previous support or resistance, that could be a location item. Okay. All right. So you guys get the picture, right, of what a location item could be. It could be a moving average. That's right, a fib level. Okay. So those would be location items that I'm referencing. Areas where buyers or sellers are interested in getting involved. So if I looked at this daily chart, this is a daily chart of the dollar yen. So the first thing I need to do is look at this chart and ask myself a couple questions. One of them, what is my bias here? What is my directional bias on this? Okay, what would you guys say? What's our directional bias on this? Any thoughts? Okay, flat, up, not so sure, sideways, bullish, long, okay, so a whole range of opinions, right? Which is what which makes the market work, right? So let me just explain what we were talking about. So in our trading room over the last week or so, we've been talking about this 99 level and talking to the traders about watching for this 99 level to be broken and hold above it, okay? Which is what happened. So we finally got, so the first one was kind of a false, kind of a fake out here. We finally got through and we held above it up here. So I have a bullish bias at this point saying, look, we broke out of a bunch of this stuff here. A bigger picture trend line coming down, this previous resistance area around the 99 area, and we broke above this level, okay? So my bias, once we get above the 99 and hold, has been bullish. Okay, and I've been looking for moves to test the 100 and the 100 half level. These are kind of some next levels I've been watching for in the dollar yen. So my bias has been long. All right, so would I be wanting to look for, if my bias is long, all right, and maybe your bias is different, but if my bias is long, then what kind of trades should I be looking for? Shorts, longs, what's if my bigger picture, my higher time frame bias is up, then I should only be focusing on long entries, right? If you want to be a little bit more consistent, one of my trading motto is this: take the right trade at the right time. So we all might have a strategy which could be the right trade, but the question is that the right time to take the trade. If you can get to a point where you know it's the right time to take a trade, you can become more consistent over time, right? More consistently profitable. So that's my objective. I'm trying to get my bias here. It's bullish. So now I'm trying to take the right trade at the right time by looking for long entries, all right? Strategies that I use for long entries. Okay, so let me I'm going to skip this one. All right, so the question is, when is a new trend beginning? Now, multiple time frame analysis. Let's come back to this. So if I start, right, I have to ask myself, okay, where could a new trend begin? Well, if I look at the higher time frames, and they're coming into these location items or areas where buyers and sellers are interested, or if my bias is bullish, right, on a higher time frame, then I can watch the lower time frames for specific patterns to develop that show me that a new trend is beginning. Okay, so let me try to tie this together. So one thing that I like to look for that tells me a new trend is beginning is a price expansion pattern on a lower time frame. Okay, and when the lower time frame, if I see a price expansion pattern on a lower time frame, when the higher time frame is at a location item or the expansion is in agreement with my higher time frame bias, that's when I'm interested in taking the trades. Okay, so let's break this down. Let me try to put this into perspective for you. So let's assume, guys, that this big gray this big gray structure here is our higher time frame, the daily chart. And let's just say that this is a rally here to the upside. We get a retracement, okay, in the daily chart. It's in an uptrend, but we're getting a standard retracement, all right, and then the follow-through move in the daily chart. Now, what I want to do is talk about how multiple time frame analysis works, or how multiple time frames come together, okay? And the way that it works, guys, is this. If we took a microscope and we drilled down, okay, actually, let me back up. Let's assume we've got a location item right here, right? An area where we think buyers on the higher time frame are interested in getting back in, okay? Now let's drill in a little bit. Let's take a microscope. So the big gray area is the daily chart. Let's say that this yellow is a 1-hour chart. So if we could use a microscope and look inside the daily chart, we would probably see something like this, where we would have this uptrend, right, where we just had a standard move higher in a daily. We'd actually have a complete uptrend in a 1-hour chart, where the daily just had a standard retracement, okay, maybe 1 or 2 candles of 2 or 3 candles of retracement. That would actually be equivalent to a downtrend in a 1-hour chart, okay? So that would be equivalent to a downtrend in a 1-hour chart. You guys following this? Let me know if you guys are catching this. So the gray area is like a higher time frame, the daily. Within the daily, the hourly chart would have all different kinds of trends going on, okay? Now, if we come down and we get this retracement to this location item, this is an area where I think buyers on a higher time frame are interested, right? Now, these higher time frame traders drive the market. This is like the train. And what I want to do is try to catch a ride, all right, on a lower time frame. So what am I expecting to have happen when I get a retracement down to this location item? What could happen? Okay, what could happen here? So if we come into a location item, yeah, we could get a bounce, right? We could get these higher time frame traders to start buying, right? And if they started buying on a daily chart, what would happen to this downtrend right here on my intraday chart? What would happen to my downtrend? Okay, it would potentially reverse and start a new uptrend, right? You guys follow that? So we're potentially going to see the 1-hour chart shift from a downtrend to an uptrend. And this is what I'm looking for. Okay, this is kind of what I'm looking for here. And if I can identify a price expansion, which this is one here, then that's one of the best signals that the buyers are coming back in, and that I could see a brand new trend be created on the lower time frame. So I want to look for opportunities right here to capture the beginning of a new trend on the intraday time frame. All right, let me know if you're with me on this. You guys following this concept? Okay, you guys following this concept? Okay, so let's talk about the setup. Let's talk about this pattern, this price expansion pattern that we're looking for. Okay. All right. So let me just do a quick recap just to make sure everybody's on the same page with me. So this gray area, the gray is a higher time frame daily chart. We might have a few up candles on this daily chart, which could be a full uptrend on an intraday chart. Okay. When we get a standard retracement on a daily, it could be a downtrend in a 1-hour chart or an intraday chart. When we get the daily to pull back to location items on the higher time frame, right, the daily chart, this could be an area where we could see brand new trends begin to form on intraday charts. All right, and what I'm looking for is one of the best signs that tells me that this new trend is beginning is a price expansion. And when I see this price pattern occur, then I'm looking for entry opportunities, because it's the kickoff. It's a good chance, a high probability, that we are kicking off a new intraday trend where I can really capture this trend and maximize my profits. Okay? All right. So let's keep moving. So let's talk about this price expansion. So the definition of a price expansion is when the distance between support and resistance increases beyond the normal range. Okay, so think about that for a second. When the distance between support and resistance increases beyond the normal range. Okay. Now this is caused by large amounts of buying or selling, right? So when we get this price expansion to occur, it's, the catalyst is lots of buyers are interested or lots of sellers are interested, which is what I'm looking for. I'm looking for buying or selling interest. Okay. I think it's best on the 5, 15, 30, and 60-minute charts. My personal preference is to trade it on 30 and 60-minute charts using the higher time frames, the daily or the 4-hour, as my higher time frames. Okay, this is my personal preference. So let's talk about a bullish expansion. What would that look like? Well, this is basically when buyers are heavily entering the market and it causes this bullish expansion in price. Remember, we talked about the distance between support and resistance increases beyond the normal range. So here's resistance, here's support, right? Here's our range. Here's support, here's resistance, right? Here's our range. So an expansion would be when that distance expands. Do you guys see this? You see how big that is compared to these prior distances between support and resistance? Let me know if you see that. Does that make sense about what I mean by an expansion? The distance between support and resistance expands beyond the normal range. Okay? All right. So that's what I'm looking for. This would be a bullish expansion. So bearish expansion, guys, would just be the opposite. Sellers heavily enter the market, causing an expansion to the downside, right? So the normal distance between support resistance is here, and all of a sudden we get this big expansion move where the distance increases beyond the normal range. All right, so that's the definition of a price expansion. Okay. All right, so let's look at a chart, and here's what it would look like. Okay, so again, you've got support resistance levels. Okay, and we get a pretty decent expansion beyond the normal range. All right, so here's another one. Okay, distance between support resistance levels, right? I think it's good to do these minor support levels, but we get a pretty good pop beyond the normal range. Does everybody see that? Okay, does everybody see that? Okay. All right. So somebody asked, does it matter if it's news driven or not? And so I think it was Tony. If it was just blowing by me, but the answer is if we do get news driven expansions, they still have to happen. If they happen at the right place at the right time, I'm still interested. Okay. Good question. All right, so there's a 3-step pattern that we're looking for these price expansions. Number one is we have to have a price expansion, all right? So we need to see this price expansion develop. Now let me give you a couple rules for how I qualify this as an official price expansion, all right? So price must be coming off a lower, we're talking about a bullish expansion here. Price must be coming off a lower swing low and close above the last swing high prior to any retracements. Okay, so what we're saying, guys, is price has to come off a lower swing low and close above the prior swing high. All right, so that's going to be one of the qualifying expansion setups that we have to see have happen. So that means basically that this would be in a downtrend, right? You guys understand that? For a bullish expansion, we have to be in this downtrend coming off of a lower low, and we have to rally above this prior swing high, and we have to close above that before we get any type of retracements. Okay? Does that make sense? So this is kind of our qualified definition of what's really an official expansion. Has to come off of a lower swing low, has to close above the prior swing high, okay, before there's any type of retracement. All right? That would be a bullish expansion. So if I pop this chart up, you guys tell me, is this a valid bullish price expansion? Is this a valid bullish price expansion based on our definition? Okay, so we ask ourselves a couple questions, right? Did it start off of a lower low? Yeah, we came off of a lower swing low, right? Did we take out and close above the prior swing high? Some people might say this is a minor high, or even if we said, yeah, this is a high. Did we close above that? Yeah, absolutely. So this would be a valid price expansion. The time frames I look for price expansion, guys, again, my personal preference, I would say 15, 30, 60-minute charts using your higher time frames, the daily and 4 hour. Okay. Is this a valid, so this is a valid price expansion. What about this, guys? Is this a valid price expansion? Okay, so I got some no's and some yeses. So ask ourselves this question. Did we come off of a lower swing low? Did this bullish price expansion start with a lower swing low? Okay, so we kind of kicked off this expansion right here, right? Was it a lower low? No, because that one was lower, this one's lower, right? So it actually started with a higher low. So did it take out previous resistance level and close above it? Yeah, it did. But it didn't kick off with a lower low. So I wouldn't be interested in this. Okay, everybody understand that? We didn't start with the lower low, so this would not be a price expansion I would be looking for. Okay, so that would be invalid. So bearish expansions, guys, just the opposite. Okay, so it's got to be coming down. We've got to break through. It's got to start with a higher high. Right, we've got to start with this higher swing high. We have to come down, break the prior swing low, and close below it. That would be a valid bearish price expansion. So is this a valid bearish price expansion? So ask yourselves the two questions. Did I start with a higher swing high? And did I close below the prior swing low? Okay, so the answer is yes, right? So we came off of a higher swing high. And did we close below the prior swing low? The answer is yes. This would be a valid price expansion. Okay. What about this one? Is this a valid price expansion? So ask yourself the two-part question for a bearish price expansion. Did it come off of a higher swing high? And did we close below the prior swing low? Okay. So the price expansion, right, we're looking for a really steady stream of selling, which would be this guy here. And it didn't start with a higher high, right? Okay. So this would be invalid. Okay. All right, so let's go into this. So the next thing, after we get the price expansion, guys, we're looking for a specific type of retracement to come into play. All right. So the specific type of retracement that we're looking for is this. We want prices to retrace between the 23.6 and the 50% retracement levels if you use the Fibonacci retracements. Now, I don't want it to go beyond 50%. Anybody know why I don't want it to go beyond the 50%? Any thoughts? So why not below the 50% level? Why not retrace? Okay, so just think about what we're trying to do, right? So think about what we want to see have happen. Now, remember, on the higher time frame, we have, let's assume we've got a bullish bias, right? And maybe we've retraced into some location items. And we've seen this price expansion occur off the lower time frame. Well, if it retraces beyond the 50%, are the buyers really getting interested again? How interested are they? If they're not coming in, if they're letting it retrace beyond the 50% move, how interested are they? Are they super interested or not as interested? Yeah, not as much, right? So think about this. We really want the buyers to be aggressive. We want them to come back in before it allows price to retrace too deep. So if price retraces beyond the 50%, to me, I'm not as interested because the buyers aren't coming in as hard as I want them to. Okay? They're not supporting our initial move. Does that make sense? So we don't want really deep retracements. In fact, we want it to retrace between the 23 and the 50%. Okay? If we go beyond the 50%, to me, the buyers aren't as interested as I want them to be. Okay? All right. So that's the second thing. We just want that retracement to come. And then we want to see the continuation happen. And we'll typically get it if we are taking the right trade at the right time, right? Using that daily or 4-hour chart as kind of our gauge or our guide to look for these new trends to develop, okay, on the lower time frame. So how do we get in? Well, basically, guys, there's two ways that I'd say you could get in. One would be an aggressive entry, which is buy when the current candle closes above the highest point of the lowest bar in the retracement. So if we've got this retracement coming down, I'm looking for the lowest candle, which is this guy. If I cross above this high point, okay, if the next bar rallies up and crosses above that, that would be an aggressive entry. Okay, so the other entry, guys, would be a conservative entry, which is basically when we look for the lowest candle, and we would have to close above the highest point of the lowest bar. Okay, so those are two different methods of entry that I would be looking for. Yeah, we'll look at an example here in a minute, okay? I just want to get through all these steps, and then we'll pull up an example. So those are the two types of methods of entry that I use for this. Would be a conservative and aggressive. A lot of times I will use the aggressive method, especially if we're at great location items on the higher time frame, and we've got a nice expansion move. Typically we'll get the follow through, okay? Not always, but a lot of times we will. Stop loss goes below the lowest bar in the retracement, all right? So if we've got this retracement, okay, that we've got, again, the lowest candle is kind of the one that we're going to gauge everything up. If we take out the high, that's our entry. So once we get in, right, our stop loss would go below the lowest candle in the retracement, all right? Say, Rob, at least by the spread, right? So a few pips, like 2 to 4 pips, basically. Okay, so 2 to 4 pips. Okay. Identify target levels. So basically, we're just going to use logic here with looking for previous support resistance levels. All right, one thing that is very common is we want to look for a symmetrical move of the expansion. Okay, a symmetrical move of the expansion. I'll explain that in a minute. We also want to make sure, guys, if we're going to look to maximize profits, we have to look at the higher time frame for those bigger target levels. Okay, so that's the way we're going to maximize our profits, is go back to the higher time frame and say, okay, where's a logical, realistic level that this higher time frame could go to, right? And that's going to take a while on our lower time frame as the lower time frame trends up to those levels. But you'll look to that higher time frame to pick off those bigger levels. Okay. All right. Yeah, so this is a pretty much a pure price action play. So let's go through an example, guys. Let me try to put all of this together over the next couple of minutes before I have to close shop. All right. So this is the dollar-yen, the daily chart. We looked at this as our bias. So my bias on this was once we got through 99, I was bullish. And in fact, we started to get a retracement, maybe to come re-challenge these location items, right? So higher time frame, daily chart, retracing to challenge these location items. And so what I want to do is I'm bullish on the dollar-yen. So I'm watching intraday charts for an opportunity. I want to see the buyers come in and show me they're going to get involved. Okay. So let's break this down and go into an intraday look. This is a 1-hour chart. Prices on the dollar-yen were trending lower. All right, guys, you guys see this? And we put in this new low. And then we got this price expansion that developed. So we went from a new low, and we took out these prior highs. Okay, here's these prior highs, and we closed above it. Does everybody see that? Does everybody see that? So this is our intraday chart. Okay, remember that the higher time frame we just looked at, it was bullish, right? We're bullish on that. We're coming into some location items in that area. So we're watching now the intraday time frame to see if we see a sign that the buyers are interested again, if they're coming back in to create a new intraday trend. All right, so I see this price expansion. All right, price expansion, guys, is basically from this new low up to this level here. We take out the prior highs, we closed above it. Okay. All right. So the next thing we want to watch for is a retracement. Okay. So we want at least a 2-bar retracement to which fib levels? Anybody remember? Between what retracement levels are we interested in? Yep, 23 and the 50. If we go beyond the 50, not interested. So fib retracement on this, guys, we're pulled back to the 23.6. All right. So anybody remember how we would get involved? Our entry? Anybody remember how we would get in? We have to take out the highest point of the lowest bar in the retracement. We've got a 2-bar retracement here. Highest point would be right there, this blue line. That would be our entry. if we take out the highest point of the lowest bar in the retracement. Stop loss, guys, would go below the lowest bar in that retracement. Everybody see that? Yeah, you can place pending orders on this, okay, unless you're waiting for a conservative entry. You got to wait for that close, okay? So stop loss on this trade, guys, 16 pips. All right, so we got about a 16 pip stop loss on this trade. Now I talked about looking for a symmetrical move of the expansion. So what is a symmetrical move? Well, basically we take it from the beginning of the expansion down here. You guys see this highlighted box to the high here. And then what I'm going to do is I'm going to start that box over at the beginning down here and take it up to the top. That would be equivalent to a symmetrical move. Okay? Everybody understand what a symmetrical move is? So I'm just taking the move of the expansion and I'm going to move that up and start it from the bottom of the retracement, and I'm looking for that as a target level. Okay? That first, that symmetrical move would be equivalent to a 48 pip target. All right, so 3-to-1 reward to risk ratio on this. So let's move forward a little bit. So we get a pop up in here, into this symmetrical move. We're playing right around the symmetrical level here. Finally kind of broke through that. Now, if I wanted to maximize profits, like I like to do, would I just be looking for this initial move here? What's really my underlying, I have confidence in this trade because of what? My higher time frame is telling me I'm bullish, right? And I've got opportunity. I've got further upside opportunity. So I'm not going to be scared and just take off all my profits, at this symmetrical move or right in here to 1 to RR of 1. Okay, I have pretty good confidence that this could be the beginning of a new trend, right? So I want to try to maximize my profits. I just don't want to take this first move up in the trend, right? I'm thinking that I could see continuation. This is like a new trend. So could could we sell a piece of this here? Yeah, absolutely, right? And try to ride the trend because everything tells us we should see further upside. There's a good chance. Okay? So here's what's happened so far. This was the Friday's close right here. All right. Actually, before the close, but this is where we're at so far. I've got another target up here at 100 half, which hasn't been quite met yet. All right. So this 100 half target's 80 pips. But you guys see how we kicked off the new trend with an expansion, and now this guy's trending up, right? And I'm trying to maximize my profits by getting involved here, by looking for the right things to come together at the right time. All right? Questions, guys? Does this make sense? You guys following this concept? This is one of the strategies that we teach in our Forex course. We have a handful of these that we teach so that you have a good tool belt of trade opportunities to look for. Now, some of you guys might say, well, how often do I get these price expansion moves? I'm going to be 100% honest. This is not something you get 2 or 3 trades on a day if you're using the daily and the 4-hour as your basis, but they're high probability trades that produce big profits. Okay, and that's why we teach other strategies, other ways to get involved in these trends, not just through a price expansion, but through other price patterns as well. Okay. Roy says, how did you decide on the first target? This is a symmetrical move of the expansion. All right. Let's see. You could use a fib extension to get that 100% move. That would be the same thing as a symmetrical move if you used a 100% extension. Okay. All right. This is a 1-hour time frame. I used a daily chart. Looking at the daily chart for my basis. Okay. All right. Hey, Joe. So most of my strategies that we teach are about 65 to 70% strike rate, but it's really not about the strike rate. It's really about, yeah, I could have a 99% strike rate, but still have a losing strategy, right? So I mean, as far as money goes, but it's like 63 to 67-ish. All right. All right, guys, so I think my time is about up. So let me just give this Anyway, so we're risking 60 bucks to make 640. Again, that's a 30% return on our initial investment. You only need $2,000 to take this trade with one standard lot. So let me just remind everybody, for those who showed up a little bit late, for everybody who attended today's course, I'm going to let everyone attend my risk management class next week. It's next Thursday on the 21st at 7 p.m. The optimal way to grow your account. It sells for 300 bucks. It's free to everybody. Write down this email address, support@pristine.com. Email our counselors so you can attend for free. Also, make sure that you ask them to give you the predicting trends with intermarket analysis. We sell this for 199 bucks. It's your guys's for attending with us today for free, for taking the time out. So we're giving you guys $500 of free education. Make sure you email us. Take advantage of this free offer. Okay, guys? And then also remember, we'll give you 30% off of all of our courses, programs, trading rooms, newsletters. That's for anybody through the month of November. But for you guys, 2 free education courses. All right. So just our information, guys. Here, I'll leave it up for a minute. I hope I was able to enlighten some of you guys, add some value, make you think a little bit maybe out of the box or differently about trading. Again, my goal is to really find trade setups that have the ability to become big winners. Do they all become the big winners? No, but I want them to have a high chance of becoming them. This was one strategy that I use, one of my most favorite strategies that we teach in the program to maximize your profits through the price expansion. But again, understanding how that intermarket analysis works with multiple time frames is kind of the key to this. Okay. All right, guys. Cost of the program. I think it's you know what? There's a few different options there. So just go ahead and contact one of our counselors. They will give you all the prices. I typically don't do the selling part of it, just mostly presenting. So your best bet is just to contact one of our counselors through that email. Okay. All right, guys. Have a great day. Good luck today. I hope everybody enjoys your time. Appreciate the Trading Pub for putting this on, and hopefully I will see everybody on next Thursday for that free class. All right, guys, have a great day.
All right, great. Thanks again, Jared. We appreciate you being here. Thanks to Ray as well, and Kurt and Amber for helping set up this event with us. And again, here's the link one more time, guys. I've got it posted as an announcement. You can also email support@pristine.com. And as he mentioned, just mention that you guys want access to that course. So thanks again, Jared. I hope that you guys enjoyed it, and I think it's a great way to start off and kind of kick off the event for today. So awesome job, and we're very excited about having you guys as usual. So everyone, at this time, I'm going to let Hubert get set up. So he's going to, yeah, that's right. We've got a great crowd. Here's a quick look. Let's see, here we go. We'll pull the map up while Hubert's kind of getting his desktop sharing going. But there's the map of lots of awesome traders from around the world. As we've mentioned, we've never been able to get to Greenland, get anybody in Greenland to log on, so we'll have to send one of you guys on a trip to Greenland to log on at some point. So